All right, here we go. The countdown is on. This Wednesday, the Federal Reserve is set to make its move, and it's the one everyone's been waiting for. After months of speculation, Wall Street's holding its breath. Futures markets, they're screaming a 94% chance the Fed finally cuts rates by a quarter point. But what does that actually mean for you, for me, for the entire American economy? Let's break it down. First up, why is this such a big deal? Interest rates are like the heartbeat of the financial system. When the Fed hikes them, borrowing gets expensive. Mortgages, car loans, credit cards, they all go up. But when the Fed cuts, suddenly money flows a little easier. That's why investors are glued to every word coming out of the Fed right now. So what should you expect if the Fed pulls the trigger? For the stock market, this is rocket fuel. Lower rates usually mean cheaper money for businesses to borrow and grow. Boost profits drive up share prices, set off a rally. If you're invested in stocks, this could be the moment you've been waiting for. But it's not just Wall Street. Think about your own wallet. Planning to buy a house, mortgage rates could edge down. Got credit card debt, your interest might finally drop. Even car loans could get a little less painful. But don't expect miracles overnight. These changes ripple through the economy slowly. Here's the catch. The Fed doesn't cut rates for fun. They do it because they see signs of a slowdown. Maybe jobs growth is cooling or inflation's finally easing off. So while the cut could bring relief, it's also a warning. The economy isn't invincible. The big announcement drops this Wednesday. All eyes are on the Fed and the countdown is almost over. Are you ready for impact? Stay tuned.